From Bronte Harbour in Oakville, Ontario, you're watching HighView TV, where facilitating excellence in the management of your wealth is our purpose.
My name is Mark Barnicat, and I'm the president and co-founder of HighView Financial Group. Thanks very much for joining me today for a special presentation that we believe can help you protect and grow your wealth in a prudent and responsible manner. As an investor, I'm going to be chatting with you today about the 7 impediments to sustainable wealth. What I'll be sharing with you today is based upon more than 200 plus years of HighView collective experience in the global capital markets. These views on investing are applicable to all types of investors, including families, as well as institutions such as group retirement plans, foundations, and endowments. At HighView Financial Group, we believe that while the attainment of wealth provides investors with freedom, the accumulation of wealth requires patience, perseverance, and hard work. Because of this, investors don't want to create their wealth twice. In fact, with the rising uncertainties in the global marketplace, many investors are increasingly seeking ways to make their wealth sustainable in order that their wealth can be used to comfortably fund their future consumption requirements. This applies, as I said, to all types of investors. In our experience in managing both family and institutional client wealth over the past few decades, we've noticed 7 impediments that investors can experience in trying to make their wealth sustainable. We're going to review each of these 7 in the following slides. Impediment number 1, relative return investing. A huge challenge in the wealth management industry today is that far too many goals are being pursued in terms of relative performance or the portfolio strategy. Beating the index by 100 basis points is not a measurement of success in achieving a goal. It's a means of measuring the success of a money manager against the market, and it's only one factor in a client achieving their goals. Similarly, managing a growth portfolio is not a goal. It's an investment strategy to help a client meet their goal. Clearly defining the client's goals in terms of time horizon, short, medium, and long, and quantity, as in how many dollars, is the only way a true investment professional, subject to each client's tolerance for risk, can begin to construct portfolios for clients that are designed to satisfy those goals. Impediment number 2, policy vacuum. In our experience, many of the investment policy statements in the marketplace today are either absent or marketing tools instead of professional documents designed to capture a client's stated set of investment objectives, risk tolerances, and constraints. Although the content of the policy statements can vary, we've always viewed the core elements required to design a portfolio to include the following. First, client's investment objectives, which is really the purpose of the portfolio to meet a financial goal. Defining the risk tolerances in terms of both capital and income potential loss. And finally, constraints that address issues such as potential liquidity requirements, taxation issues, as well as legal or regulatory matters. All clients who have portfolios advised or managed by an investment professional should demand an investment policy statement. It's a key document that outlines how your portfolio will be managed in order to pursue your investment objectives and risk tolerances. Without it, you're driving blind and will have great difficulty reaching your investment goals. Impediment number 3, schizophrenic investing. Many investors have a split mind when they invest, which runs on the 2 modes of greed and fear. In up markets, they're obsessed with how they're performing on a relative basis. In other words, am I beating the markets? And in down markets, they become hyper-focused on downside protection in absolute terms. For example, get me into something safe. In our experience, such behaviors typically lead to chasing returns in up markets and avoiding risk or chasing cash in down markets. It's kind of the equivalent of buying high and selling low, which is never a recipe for creating sustainable wealth. Instead, we believe investors should truly strive to understand their economic and emotional capacity to assume varying degrees of risk. While many investors may have an economic requirement for return and may express a desire to reach for higher returns, they may indeed not have the capacity to assume that level of risk. This is an important and often overlooked aspect of an investor that must be understood if any investment professional is to structure a portfolio solution that aligns with their goals while also not losing sight of their tolerance for risk. It's an essential balance that keeps investors comfortable and committed to their long-term investment plans through the ups and downs of global capital market cycles. Impediment number 4, island investing. In the management of wealth, whether it's for family or institutional clients, is far too many investment professionals overstate the importance of the money management side of wealth management. Clearly, the end result of any wealth management solution is that the client's assets need to be managed in a prudent and responsible manner. But equally important, though, is the non-investment, or what we refer to as the structural advice that surrounds the assets. In the case of a family, this could be the advice related to the design and implementation of investment holding companies and trusts, while in the case of an institution, it could be the design of an effective pension plan solution. For instance, is it going to be a DC or a group RSP plan? Or the governance structure that would oversee a foundation or endowment. At HighView Financial Group, we view investments as vehicles to help clients meet their financial goals. But until the client's goals have clearly been identified and the appropriate financial structures designed and implemented, it's difficult for a true investment professional to effectively design a tailored investment plan. In other words, it's the integration of both the structural advice combined with the investment advice that creates the holistic solution that so many clients are desperately seeking in the marketplace today. For this reason, we believe it's critical that investment professionals collaborate closely with clients' other professional advisors who provide such structural advice. This includes professionals such as financial planners, insurance advisors, employee benefit consultants, actuaries, accountants, and lawyers. Impediment number 5, conflicted investment solutions. With the consolidation in the global financial services industry over the past few decades, it's become increasingly challenging for investors to determine if the investment solutions that are recommended for their portfolios are truly objective and in the best interest of the client versus the best interest of the investment firm. Asset management offerings, like any other manufactured item, are comprised of at least 5 components. First are the individual securities, which effectively are the individual stocks and bonds in the portfolio. Investment management, who are the people who pick the stocks and bonds. Brokerage, the people who trade the stocks and bonds for the investment managers. Custody, the people who hold the client's securities safely. And finally, portfolio advice, or the people who structure a portfolio to match your investment objectives and risk tolerances. The challenge for investors is to determine if each of these services are being provided in the best interest of the client. In other words, is it objective, transparent, and competitively priced? We certainly recognize the difficulty that most investors would have in being able to determine whether or not they're being treated fairly in such investment management offerings. So as a rule of thumb, we always suggest if one firm is performing more than one of these services, you should be prepared to ask questions in order to provide yourself with the comfort that you're being treated fairly by all service providers. Questions such as, why have you chosen that service provider? Or how are their services priced compared to other similar providers in the industry? This should enable you as the investor to understand whether the service providers have been chosen for your benefit or for your investment firm's convenience. Impediment number 6, portfolio monitoring gaps. Once implemented, investment professionals have an obligation to ensure that clients' investment objectives are diligently being pursued. This requires a strict adherence to each client's investment policy statement. At HighView Financial Group, we believe in order to make a prudent assessment of how a client portfolio is being managed, it should be reviewed against its portfolio construction metrics, such as asset allocation, security quality, diversification, as well as an overall assessment as to historical returns against the account objectives. Once a client portfolio review has been completed, it's inevitable that from time to time, various portfolio violations, whether it's an asset mix, a security quality, or diversification, are going to be identified. As a result, we believe every investment firm should give careful consideration as to their follow-up procedure to ensure that the client portfolio violations are rectified within a reasonable and prudent period of time. Alternatively, if an investment professional believes that such portfolio violations are in the best interest of the client, an updated and signed investment policy statement should be obtained as soon as possible from the client. Impediment number 7, infrequent reviews. To ensure a client's investment portfolio continues to meet the objectives and risk tolerances for which it was designed, it's critical that 3 types of regular or periodic reviews occur. The first is a goals review. In other words, have the client's goals changed? Portfolio reviews. How has the client portfolio performed against the client's goals and risk tolerances? And finally, policy. Because of any changes to goals and portfolio structure, does a new, updated investment policy statement need to be obtained? As an investment professional, you want to avoid what a new client recently told me about his previous investment advisor, which is, and I quote, "My last quarterly portfolio review was 20 years ago." Impediments and solutions. So as you can see, the 7 impediments, we've listed a solution beside each of them. For relative return investing, we believe investors should adopt a goals-based approach to investing. To avoid a policy vacuum, we believe investors should use investment policy statements. To avoid schizophrenic investing, we believe that portfolios should be designed to address the return requirements and risk tolerance of each client. To avoid island investing, we believe that investment professionals need to collaborate with other professional advisors around the client. To solve for conflicted investment solutions, we believe investors should seek objective service providers, or where conflicts exist, understand very clearly where and why they exist. For portfolio monitoring gaps, we believe investors should ensure that their portfolios are monitored on a regular basis against their policy statement. And finally, for addressing infrequent reviews, we believe investors need to insist on regular reviews that address the 3 areas of a goals review, a portfolio review, and a policy review. So how can HighView help? To ensure that these 7 impediments don't impair our clients' abilities to create sustainable wealth, at HighView we've designed a unique 3-step process called the HighView Wealth Sustainability Process. It includes comprehensive and objective asset management practices that have a broad range of solutions which avoid conflicts of interest. They are integrated in a goals-based investor profiling approach that uses an asset liability or balance sheet approach to crafting client portfolios. And finally, they're integrated with the stewardship or the oversight with various professionals of how client wealth is managed, all with a fiduciary mindset. I'd like to thank you again for taking the time to watch this presentation. If you'd like to read an article version of this presentation, please go to our blog, The Wealth Steward, and search for 7 impediments to sustainable wealth. I hope this presentation has provided you with a better understanding of how you can avoid the impediments to successfully creating sustainable wealth. You can share this video with others by simply clicking on the share button of HighView TV or pasting this link in an email to them. If you have any further questions or comments, please contact me at the information on your screen.
You've been watching HighView TV, a media production of HighView Financial Group. For more information on our firm, please visit us at www.highviewfin.com.